Hi, I'm Ewan Fletcher.
And I'm Glenn Sharp, and welcome to the Sharp Accounting News.
As you'd all be aware, interest rates are starting to increase both in Australia and around the world. It's really important as a business owner, you look at what exposure you've got in relation to the level of debt you're carrying within the business and also the level of repayments and commitments you have within your business, both for loans and also maybe chattel mortgages, so equipment loans, and just making sure you've got the best rate on your business borrowing.
One of the major pieces of economic news recently has been the rise in interest rates for the first time in a number of years. Coming off historic lows, the RBA has now increased interest rates by 0.75%. We expect that come the end of the financial year that we'll have another couple of interest rate rises and that we'll be sitting somewhere around 1.4 to 1.5% official cash rate. What this means for you and your business, you need to get proactive and get in front of it and make sure that you don't just sit back and relax.
From the 1st of July, the superannuation guarantee charge that's paid on wages to employees is going to increase from 10% to 10.5%. In addition, there will no longer be a carve out if wages are under $450 to not pay superannuation. So make sure you take this into account when you're paying wages.
Inflation is at one of the highest rates that I've seen in 25 years, running at somewhere around 5%, with interest rates also rising to try and combat inflation. Now's a really good time to sit down and have a look at your household spending budgets, your business budgets, and look at areas where you can trim up some costs. I think the next 12 months we're going to see a bit of pain in the economy, so it's a good time to get ahead of the curve and look at what you can cut down on, what you can do to manage your budget, but also what you can do to grow your revenue base as well. So it's a good time to sit down and look at where your business is heading.
As we're nearly halfway through the calendar year and coming to the end of the financial year, it's a great time for you as a business owner to do a bit of goal setting and set yourself some targets for your business for the next 12 months. If you need help in relation to this, reach out to us. It's what we do with a lot of clients this time of year, and it gives you something to work through during the year.
Recently in the news, there's been a lot of changes to the insolvency laws and the introduction of a small business restructure option that allows businesses to draw a line in the sand if they are currently trading insolvent but have really good prospects of moving forward. The ATO is really supportive of a small business restructure where you might pay cents in the dollar to clear your existing debts and give you the opportunity to move forward with your business into the future. That the key to this is to make sure that you don't bury your head in the sand and that you get advice early and be proactive with it. If this is something that you may feel your business is struggling, then please get some advice and come and talk to us and we can help you.
As we approach the end of the financial year, it's a really good time to consider whether you're using the best operating structure within your business. For example, if you're still operating as a sole trader or a partnership, you may have grown to the size where it makes sense both from a tax point of view, but also a risk and asset protection point of view to restructure yourself either to a company or a family trust. If this is of interest, let us know and we're happy to talk to you about it.
Coming up to the end of financial year, don't forget the single touch payroll finalisations will be due for the 14th of July. What this means is that you'll need to finalise off all your employee wages and have all their what we used to call group certificates done by the 14th of July so that they're in a position to be able to get their own income tax done.